Welcome everybody to the latest version of Talking Ball. This is the 1st of June. We are Signal Centre. I'm Joe, joined by Steve and Jamie. Good morning, guys.
Good morning. Happy birthday, Mum.
Oh, happy birthday, Mrs.
Happy
O'Hare.
birthday.
Yeah.
There you go.
Done my bit as a son.
Yeah, well done. You don't need to put a post on Facebook now, either, do you? Now you've done
No,
that.
absolutely not. Absolutely wouldn't do that.
Excellent. Okay, so first trading day of the month, last trading day of the week for us. God save the Queen. We've got 2 bank holidays coming up, so this will be the last one for the week. Then I'm actually off for a week, so it'll be you two holding a fort, I hope.
Oh,
Or you
well,
two going to have a holiday as well now I'm not around.
Well, yeah, while the cat's away, the mice will play, obviously.
Exactly, yeah.
We'll hold it
Don't
down.
blame you at all.
Jamie, you probably haven't heard of a saying like that, have you? It's probably too old for you that while the cat's away, the mice will play.
No,
You know it's all about mice, though, don't you?
I know too much about mice, but that's a whole other story.
Cool. Right, let's get this done then to end the trading week for us. In terms of the latest news headlines, there are a few bits to focus on today. Just need to bring up my news, and we have fresh record high for Eurozone inflation. The number increased to 8.1% for May from 7.5% for April, which was above the forecast of 7.8%. So another new high there. Maintaining pressure on the ECB to tighten rates. According to the ECB, it looks like they're not going to raise rates potentially until July, although there is a live meeting in June. So we have to wait and see whether or not they're going to be forced into doing something. And I think even if they do, it's only going to be 25 basis points. The US consumer confidence number edged lower. It declined to 106.4 for May, revised from 108.6 previously. Although that was above market expectations, there was a decline in the current conditions and expectations for the month, with slightly less confidence in the labour market. We saw the US yields move higher yesterday. The 10-year hit 2.87%, and higher yields again underpinned US dollar and triggered reservations surrounding equity markets. In terms of oil, we saw a retreat from 2-month highs yesterday following reports that OPEC could exclude Russia from overall production targets, which would potentially increase scope for higher OPEC output. The OPEC rhetoric will continue to be watched in the short term. The Swiss National Bank are watching inflation closely. They've stated that the higher nominal value of the franc has dampened inflation, and added that the Swiss inflation in Switzerland is relatively low compared to other countries, but not irrelevant. And we've got the Bank of Canada today. They're expected to hike rates by a further 50 basis points, making the overall rate at 1.5%. The statement will be important, but there is no updated monetary policy report at this meeting, and that's at 3 o'clock today. So if you've got any Canadian exposure, please do be aware of that later on. Okay, let's get into some charts. Steve, you want to kick us off?
Yeah, sure. I'll kick you off with what we've seen on Bitcoin so far this week. We've seen a nice reaction. This is a weekly chart, so obviously we're only Monday, Tuesday, Wednesday, 3 days into it. Still got another 4 to go, but we are sort of getting towards the top of this support level, the support band that we've got. And this is where the sort of like, this is one of the higher volume areas. If we look over, well, since the sort of like, since November last year. The point of control, as it were, is around about 37,000. I still feel it's going to struggle to push much higher than where we are, really. Can't see what's going to ignite this, but I don't know enough about the fundamentals of Bitcoin to go into that. We could have a little bit of an ABC correction that could sort of like lead to a move possibly up to the 34,500 level. Yeah, that will be in this sort of vacuum area over here. So, but yesterday's price action doesn't look too positive. It's a doji candle. That's a sign of indecision, and we're on the back foot this morning. So potentially we could have seen a short-term top. We'll know really by the end of the day. And if we look at the 4-hour chart, we can see that Yeah, let's get some sort of trend line going in here. Here we go. Drawing a nice little trend line down, something like that. Still short of the 35,000 resistance, but we have sort of got to these levels that we rallied to before, around about 9th, 10th of May. So, yeah, if we look at the hourly chart, there's maybe signs of a head and shoulders formation. Getting loads of little messages pop up. Thank you, boys. Here we go. Head and shoulders formation. Here, 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 here. No, not a great one. Don't like that at all. But it's the shape. It's the same shape. We've got left shoulder, neckline. Oh God, everyone's calling me now. And we've got this right shoulder here, possibly the neckline. A break. If we do manage to get a break of this level here, then yeah, we could see further downsides rather rapidly. We can see there's like quite high volume on this sell-off here. Nothing really to mention with others in there. Let's dive into commodities. Gold had a bit of a sell-off yesterday. Now let's take a look at the daily chart to capture this, and we can see we had a little bit of indecision over the last 3 days, from last Thursday, Friday, and Monday. Tuesday's sell-off, the high was 1857, didn't quite manage to get back above the 1865 to 70 resistance. That's where our resistance is now. Nice strong sell-off there, and potentially was that on the back of a little bit of dollar strength. Let's have a quick look at dollar strength.
Yes.
Saw a little bit there. So yeah, probably that's the main reason for that. And still in this downward channel. So I think that could be a short-term top as well. Opening up a little bit further on the downside. We got down to 1829. There was support around 1832 from memory. But for me, the real key support probably is around about the 1800 down to 1790 area. So that's yeah, on the back foot. We've had a little bit of a rally this morning, which is looks okay. Let's try and get some charts in there. That inverse head and shoulders doesn't look like it's playing up. So let's have a look at oil. Oil continues to move higher. However, we did have a major pullback yesterday. On the 4-hour chart, this is almost an evening doji star. Remember we had this gap on the charts from the Monday close, which we closed early Monday, so it was a US holiday. We opened up with a gap, and I said yesterday would potentially fill that quite quickly. It filled it very quickly indeed. Now prices have moved down to 113. That's the sort of like where it based out in WTI crude oil. Support below there comes in at 111.70. So I think there's like a band of support down here, but we seem to have seen a nice little bounce off that. But wouldn't be surprised to see a retest of this support area before prices move on. That's me on the commodities.
Thank you, Steve. Okay, let's take a look at FX then. Starting off with the dollar index, as Steve alluded to, there was some strength in it yesterday. We did push a little bit higher. We're off of the best levels of the session, but still managed to close with some green on the chart. And we are also higher today, only by 0.8% as things stand at the moment. So maybe a room for a little bit of a consolidation here following this corrective move to the downside, and potentially we could see a little bit of a move higher towards maybe 102.98, which would be into this kind of resistance zone here. Overall, the trend remains pretty positive, so still expecting the underlying dollar strength to remain. Obviously had a knock-on effect on the likes of euro US dollar, which has rallied into this downtrend resistance line and also a 38.2% fib level, as you can see here in blue. Now that's the fib levels from this high up here in February down to these lows that we posted in mid-May, and you could argue we've posted a bearish engulfing candle yesterday as well. The body of the candle has engulfed the gains that were seen the previous session. So maybe that could also indicate potential for a reversal there on euro US dollar. Obviously, overall trend remains pretty bearish, so I wouldn't rule out a move lower. Similar situation on cable. We can see another engulfing candle there. Bit of strength today, but very mild, and that failed really into this resistance level here at 126.38. So expecting to see lower prices there. I'm not going to dwell too much on FX. Just going to focus on those major currencies that most people trade, and then I'm going to take a look at some indices. Starting off with the German DAX, again engulfing candle yesterday, although it is above support at 14,319, so potential for it to stall here, maybe build a bit of a base in the short term before a continuation higher. But if we look at the US markets, we have seen this break of the channel on the NASDAQ, but again, we posted an engulfing candle yesterday, so potential maybe for a little bit of a pullback there, maybe to retest this channel before maybe going again, or it could just be a bit of a fake out. We've seen this break higher, and actually what we're going to do is just reverse course in line with the dominant trend, which is clearly to the downside at the minute. But this 50% fib level has done a pretty fantastic job of supporting prices. That comes in at 11,698. So while that remains in place, there is potential, I think, for higher prices. If we look at the S&P 500, still looking at this head and shoulders top, we have had a decent break higher through resistance at 4,097. And what we've seen over the last couple of sessions, or yesterday's session, was a little bit of a pullback to retest that previous resistance, now support, which seems to be holding, although we did post, again, an engulfing candle yesterday. So a bit of a mixed bag. I think I'm sort of more in favor of this dominant pattern that we can see on the longer term chart. And that I'd be using that to sort of dictate my overall bias on this. But can't rule out, I think, in the short term, some more choppy price action and the potential for a continuation on the correction side, moving higher. So that's that on the indices. And yeah, nice, short and sweet to end the week. Jamie, over to you.
Cool. Thanks very much, Joe. So we'll start off today, as usual, with our biggest gainer and loser. And I had to get out the circle tool so we could actually see how high this stock jumped. This is TXMD, Therapeutics MD. Was up 364% yesterday. And I had to go a little bit digging for the story. Apparently, I've already lost it. It was just here. Oh, I'm still on yeah, here we go. This is bringing up the wrong headlines. I'm not really sure why it's bringing up ICVX. I don't know if that's something I've done wrong, but let's see if I can bring it up here. There we go. Cool. So yeah, it's just this last bit here. Skyrocketed 360% after saying it agreed to be taken private by EW Healthcare Partners as part of a deal that values the company at about $177 million. So a pretty nice day if you were in on that. Obviously was in a pretty terrible downtrend before and has gapped up really nicely straight back into this previous support level, which will now act as resistance. So one to keep an eye on after a huge move like that. On the flip side of that, we've got our biggest loser, ICVX, which is Icosavax, I don't know, which was down 33% on this really nasty looking bearish candle right back into the previous level of support. Let's see if we can find a bit on this. Declined 23%, says here, on light volume, following a 1.2% gain. So nothing really highlighted here. Oh, that was May 23rd. So actually no information on that at all. But yeah, gap straight, didn't gap, but it's closed back in at this previous support level with the volume slightly increasing on what it has been. Obviously, we had this big volume around earnings, and it's starting to pick up again now. So not looking so good on ICVX. We'll have to take a quick look at the heat map. And there's a fair bit of red across the board. Nothing too crazy. This light red color that you see on Apple shows that stock was down, I believe, less than 1%. And the darker the color gets, the more severe the move. So you can see Amazon was up quite nicely, up 4.4%, which means it was up over 3%, I believe. So, yeah, looking at this, there's not too much to take away. Google had a nice 1.29% day. Amazon's a real big one, up 4.4%. And we'll jump into a few of these now. We'll start with Amazon, actually. If I can, there we go. Right. So a nice day for Amazon. As I was saying, we had this double bottom pattern here, which is highlighted by these two blue lines, which you can't actually really see anymore because the fib's over it. But nice double bottom pattern. We had this doji into this support, hit the resistance, into support, hit the resistance the day before yesterday, or that would have actually been the end of last week, wouldn't it now? And then has gapped through and closed really strongly through what was this resistance level here at about 2,310. And the volume's picking up nicely on Amazon as well. So potential for this double bottom pattern to play out. There's a lot of P's there. And the measure move target would be from the support to the resistance. You take that out, and it's given us what this yellow arrow shows here, which is up to this, just the bottom of this downside gap. So I think perhaps a nicer area for price to consolidate if it were to get higher. We can see we've got this previous support level, really key one here at 2,720, which price found a lot of support at before gapping through on earnings. But that coincides with a 50% Fibonacci level from the high of this move to the low. So perhaps that's where price will be targeting next. But one to keep an eye on. Coinbase, we've looked at this a couple of times, the potential for this bullish flag to be playing out, and we had a nice move yesterday, but the close wasn't great. It's not quite a doji, but you could see that the sellers were really coming in, and we had increased volume on this day as well. Actually, even more so than the 20-day average, which is a fair bit considering how the averages come up because of this spike we had here in volume. So it'll be interesting to see where Coinbase heads next. I wouldn't be surprised if we had a little bit of a retracement here, perhaps back into this short-term, what was resistance into now support. But we'll keep an eye on that. Alibaba had a nice day up, 2.83%. Gap through this previous resistance we had here, but again closed lower. What I'd probably be looking for here if I was bullish on Alibaba, I think I pointed this out yesterday, something like, look at these ghost candles, which I discovered. A move perhaps like this, and then a bit of a break higher. So kind of a consolidation around that resistance level I've got marked on, and perhaps into a move higher from there. But it was a nice move actually, because it gaps above this resistance, and this kind of was not particularly well drawn trend line, but we've gotten above this pretty conclusively now. So yeah, things are looking up a little bit for Alibaba after a really tough year or so. Lastly, I wanted to look at was GME, which is actually down 9%. It was the biggest loser on the stock side. Keep an eye on every day. And we've looked at this a few times in the last week or so. But you can see yesterday, end of last week, we tested this key level we saw here at 139. And yesterday we did have a sell-off back into this 124 level, which I think if I quickly draw out we had a bit of a consolidation around this area before. I mean, it's not perfect, but you can see price has been interested in this level previously. So it looks like we've closed through that now. It would be interesting to see where it goes from here. And it looks like we might have earnings coming up soon. And on that note, Joe, I was going to throw it over to you to perhaps take a look at our corporate calendar.
Yeah, sure. So this is our corporate calendar tool, which has been created and devised by, well, a few of us internally, but from Acuity mainly, who are our parent company. So on this corporate calendar, you'll be able to find all the corporate events that are happening across the world on some of the world's biggest companies. And if we take a look at today, we've got a number of companies that are reporting, as we can see. But as Jamie mentioned, GameStop was where our interest is at. So on these cards or these tiles, you can see that the previous earnings per share came in at minus $1.94. The forecast is actually for it to come in quite a lot worse than that, at minus 2.49. We've got a nice description of the company. I think we all know who GameStop is nowadays, following the meme bonanza that we saw. So we've got earnings today. It's coming out after market close, so we're not going to see anything until after the US markets close this evening. And what we have here is the history of GameStop earnings. Now, as we can see, going back to sort of fourth quarter of 2022, companies actually built up a bit of a history of actually coming in a lot worse than the analyst expectations. So the white dots indicate the forecast from the investment banks and any analysts that's covering it, and we can see this is actually starting to widen out quite a bit. I mean, a huge disappointing miss there at the last set of earnings, and expectations now are set a lot lower for this. So it'd be interesting to see what numbers they come back with, whether or not they can actually beat earnings estimates. Obviously, in terms of price, we're not entirely sure where it will go, because earnings can be a little bit of a lottery. We can see here that we've got a potential price range after earnings and what price can often do. And a week later, after the earnings previously, if we take a look, we can see that price was actually 61% higher despite coming in a lot worse. So that's probably not much to do with earnings, just more to do with the sort of ebb and flow of markets and, you know, the appetite towards risk in a few of these stocks. So yeah, it'll be interesting to see what happens later today. A little bit of news on there that's relevant to it as well, and we can check out maybe the new sentiment towards GME. So price is in white and new sentiment is in green and red. And as we can see at the moment, the new sentiment is fairly bearish, but the price has potentially got a little bit ahead of itself. So maybe we're going to see that put back in check, and the new sentiment's actually going to potentially dictate the price action. So yeah, quite interesting there on GameStop.
Cool. Thanks,
Nice
Joe.
Okay, so we can move on now to the gun to the head trade. So each day we publish ideas directly to our TradingView profile. And just to give you a quick update on the game and what it is that we do if you're new to this, we pick 3 ideas. Each of the ideas must have a stop and a target. All the ideas are placed at market. The trade ideas that we post and not recommend, but suggest that we're looking at will expire at 9 p.m. UK time or when the stop or the target is hit. Now, we've been doing this for a fair amount of time. This is episode 619 of Talking Ball. So we've got fairly rich history, all of which has been maintained in a spreadsheet, which we show occasionally. Let's see if I can bring that up now. So this is on the screen. These are 3 trades that we did yesterday. I went short of Nasdaq. Steve went short of S&P. Both were small winners. It was a bit of a roller coaster ride yesterday, Steve, but we managed to hold on to some profits on that. And sadly, Jamie was stopped out on his long trade on Euro Swiss. So since we started doing this, we based it on £1,000 account, and effectively that account would now be worth £2,250. So we've done a pretty good job. You know, based on the fact that we are making up trade ideas in a very short space of time and without much time to analyze these properly. So let's go today. Who wants to come up with a new idea to end our trading week in the UK?
Me.
Go.
I drew this a little while ago, and the price has moved a bit lower, so I'll adjust it. Trading at 61.5 now. I'll target a little bit more of a move there. Let's do. I still want to get a 3-to-1 out of it, so I'll target a move back down to there. Yeah, I'm getting short of this. If I look at the daily chart, got this evening star formation, which I'm pretty pleased about. We talked about it yesterday, the potential for it, and it's played out. So a negative day yesterday, although we had this pullback. Potentially, I think, an opportunity to sell into the strength that we've seen. So I'm going to go for that. I'm going to sell the Dow at 33,161.5. The stop is at 33,291.5. The target 32,771.5. Back down where you belong, baby. I'm going to publish that now. So
he's all ready to go. Look at that.
There's no going back, mate. It's all done.
Lovely.
Just have to adjust the numbers to account for you two waffling on.
Sorry about that.
As always.
Jamie, you got a trade for us?
Yeah, I'm ready to go. I'm going to make the crypto a lot happy today. I'm going to look to get long of Ethereum. So we had this.
What?
Nice...
Hold on. What?
I know.
So what?
It's happening. It's happening right now. I'm getting long of Ethereum. We have a bit of a flag type pattern here. With this nice pullback back into this support level, which I actually already had drawn on. And it's kind of, it's humming around this support level. I'm hoping it's going to kick on and move further up. I'm going to target these resistance levels here. So it gives me quite a nice little risk reward trade. So I'm going to get long of Ethereum at current price of 1932. Let me adjust that. 1932. Our take profit is going to be at 2,069. And our stop loss will be at 1,897, which gives us a nice 3.91 risk reward. Looking to get long of Ethereum today.
Okay, good luck.
Thank
I'm
you.
going to go back in for Nasdaq just because I haven't had any time to look at anything else, and yeah, it's pretty lazy on my part, if I'm honest. This is the trade idea I did yesterday. As we talked about, a bit of a roller coaster. So it sort of started off pretty well, got down to these lows around 12,480, bounced very close to the stop loss actually, but then closed back in profit for me, which was nice. So anyway, onto today's idea. It's currently trading at 12,660. I just feel really that it's maybe due a little bit of a pullback given that run high that we saw. I still think the bias is on the downside with equity markets. So I'm going to place a target still at this level here that I was looking at yesterday. That's at 12,350, let's call it, just to round it up. And I'm going to have a stop loss at 12,767, giving me just a tad under 3R as a return today. So I will get that published to the TradingView account shortly. And as we mentioned, that will be closed at 9 o'clock UK time, or when the stop or the target is hit. So data-wise today, so there'll be a few bits to keep an eye out for. As we mentioned, we have the Canadian Bank of Canada. The Bank of Canada policy decision.
Bank of Canada, Joe.
Yeah, the Bank of Canadian. They're expected to raise interest rates by 50 basis points later today. So we'll wait to see what impact that has on the market, if any. That's at 3 o'clock. Also at 3 o'clock, we've got the US ISM Manufacturing Index and also the US JOLTS job openings. So a fair amount of data there at 3 o'clock today, UK time. And that's all ahead of the non-farm payrolls, which is the biggie this week, which is out on Friday. So, gentlemen, I think that's that.
Yeah. Oh my
Yeah.
God.
I think it is.
Well, lovely. Well, enjoy your break, guys. Joe, you got an extended one.
Yes.
So yeah, me and Jamie will be back next Monday, fresh and bushy-tailed, and looking to take you through the trading week next week. Be careful out there. We've got non-farm payroll Friday, haven't we? So be even more careful out there.
Definitely. Okay, gents. Have a great weekend, both of you, and I'll catch you in a week or so.
Okay, brilliant. Cheers.
Cheers, then. Bye-bye.